So, welcome, John and team. I'll move this. Councillor Turner is the person associated with it. Would you like to second this? Thank you. All right. This is a technical part of the debt arrangements associated with steps in the move towards solving the Three Waters dilemma that was foisted upon us some time ago. I'll hand it over to you, John, and not just John, in fact.
Yes, thank you, Chair, and look, apologies,
Ross,
I'll have to leave.
Lead this group, please. Thank you.
Yep, thank you, Chair, and apologies, I'll have to leave in a few minutes to attend the Future Fund board meeting, so I might leave any questions to be answered by Ross or Andrew. But just quickly introducing the paper. So this deals with one aspect of the water reforms, which is essentially allowing Watercare to borrow in their own name and achieve financial separation from 1 July next year. There are two items covered in this paper. The first is the proposed loan agreement between Auckland Council and Watercare. So this is the sum of money which Watercare will repay Auckland Council, which will affect their loan balance as at 30 June next year. This paper outlines the key proposed terms of that loan. There's going to be a 5-year loan. It's proposed to be at a fixed rate. The loan will rank equally with other loans that Watercare will have, although in certain situations Auckland Council won't have voting rights. And the loan will also give Watercare some flexibility in the repayment amounts that it pays back to Auckland Council, but the entire amount must be repaid within that 5-year period. The second part of the paper deals with the provision of Treasury services, and the proposal is that Watercare will contract Auckland Council Treasury to provide those services on an arm's length basis, and that avoids Watercare having to effectively replicate the Treasury function that Auckland Council has. But happy to take any questions.
Councillor Walker has a question.
Sure. So my question is around the debt repayment, which is mentioned in point 4 and is mentioned again in point 22 under the terms of the loan. And point 22 mentions the loan will have minimum and maximum repayment amounts for each 6-month period. Obviously, we haven't seen that. The concern that I'm raising by way of a question is that currently interest rates are relatively high. They're likely to go down. What follows is that it's certainly going to be desirable from Watercare's perspective to be able to pay off the loan, I'm assuming, later rather than earlier. I don't know how these things affect Watercare. And of course, the related issue is that given that Watercare is going to be in a position where it effectively has to raise its capital and everything independently, because it won't have access to council, what follows is that all of this will impact on the charges that Aucklanders pay for water, inevitably. So the question I want to put is just around flexibility over the repayment of this loan, because it isn't indicated in here other than the reference in point 22. So is my question clear enough?
John, I'll have a go at answering it. I mean that the purpose of having flexible repayment amounts isn't to, allow any sort of gaming of interest rates and anything like that. I mean the loan from council to Watercare will be at fixed rates. It's really designed around giving them the ability to go to the capital markets like Auckland Council does and be able to do the optimal size transaction. So, for example, if they went to the Australian market, you'd probably want to do a benchmark issue, which is 500 million Australian dollars. So that's really why the flexibility is there, to allow them to sensibly and optimally get involved in the capital markets rather than any sort of play on interest rates or things like that. Their interest rates, hedging and expenses, that'll be very much driven by whatever regulatory regime ends up being put in place. So I'm not sure that sort of answers your question or not.
not altogether, but hopefully we can get a bit of information on this, and Watercare might have something to say about this. The other question I've got just goes to the circumstance that Watercare finds itself in, where it is subject to, as a CCO, to Auckland Council policies, strategies, and plans, and obviously a significant impact on Watercare is around growth and where growth is going. That can be affected by private plan changes, a range of things. So, given that we've had a very recent circumstance where Watercare has come out and they've produced a map that significant parts of Auckland, that includes, for example, the Hibiscus Coast, where I am, aren't going to be able to have access to connections in the near future. How are they going to get around in this arrangement where they're going to have to fund themselves completely because they're not going to have access to us, but conceivably they may need to raise significantly more debt in order to accommodate the constraints that they've got currently.
Yeah, through you, Chair, look, this is probably a question outside of the scope of this paper, but I guess, you know, the debt profile and CapEx profile, that'll be largely a call for the Watercare board, but obviously it'll also form part of the council group and therefore council's group long-term plan.
Mate, if I can just add to that, I mean, the whole point of this financial model is to create separation so Watercare can borrow the money that it needs to fund the investment required for Auckland. This is a transitional arrangement to deal with the debt that exists now, but what this whole process is enabling is Watercare to be in a position where they can borrow as they require. That won't be a free-for-all, but there will be controls in terms of the charter, the regulation, and the statement of intent. So, you know, you will have influence through those things. This is just the mechanisms to put them to a place where they can borrow what's required for Auckland.
Okay, so the other question I've got just comes back to this date, which is a pretty significant date of 30th of June 2025. I mean, given these revelations that we've had over the last just couple of weeks around all of these constraints around parts of Auckland, Hibiscus Coast, Howick, I mean, they've got a double whammy in terms of wastewater and water constraints. Are we going to ensure, as a council, that there's an accurate set of information around the needs of Auckland prior to this 30th of June 2025 date?
I think what you're talking about there is, you know, the investment plans for Watercare, and
Yes.
that's kind of outside the scope of this debt paper. That is a matter for, you know, the work on the charter, and, you know, Watercare's charter, Watercare's business plans, and that economic regulation piece. So it's probably better directed to the other conversations around Watercare. It's not that relevant to this particular item on debt.
Last question just goes to shared services. I mean, this paper deals with an aspect of shared services, which is around treasury services. I'm assuming that that this arrangement doesn't preclude other shared services.
Yeah, through you, Chair, I can answer this one. No, not at all. That's Watercare can participate in all shared services, albeit in certain situations there'll need to be arm's length arrangements like the Treasury one will be.
I think we're carrying on with managing the Treasury services as we have for some time, isn't it? Not correct? It's not a change. Okay, there will be a debate later on about the charter, but this is not what we're discussing today.
Probably just to expand on that, it will be a change from the fact that at the moment we just essentially have one loan between council and Watercare. What will happen in the future is they'll be going to the debt capital markets, the banking markets like we do now, and they'll be raising funds, they'll be doing hedging in their own name. So they'll effectively be replicating really what Auckland Council does now in its own name.
I think Phil wants to add an explanation here.
Just one last question.
Just before you get the last bit, Phil wants to talk about that.
Just to close out the shared services aspect, actually I've been at the shared services board meeting this morning. There's a whole suite of things happening in that shared services space and good collaboration. I'll update you on that later, but just to acknowledge, actually Watercare's feedback directly to me is that they're very happy with sourcing Treasury advice and service through the existing Treasury function, and there's no need to replicate. It's working very well, and they were very favourable, very complimentary actually. Just credit to the gentleman at the end of the table.
Okay, now your next question.
The last question just goes to interest rate, and we're forecasting, and it's in point 18, that Watercare will effectively have a different credit rating, and because it'll be carrying more debt, it'll be a lower credit rating. Is there any impact on Auckland Council's credit rating? That is, will our credit rating be enhanced and possibly our cost of capital, or are we as good as we can get anyway?
Good question.
Yeah, through Chair, that's a difficult one to answer. At one level, we're certainly not expecting our credit rating to go down because essentially the debt to revenue of Watercare as a standalone entity is higher than the rest of the group. It actually will improve our metrics. So in that respect, it is going to be a slight positive for our rating. But I don't think it will be sufficient enough to have an upgrade to our rating.
Just to add to that, so those changes are reflected in our long-term plan, and that's been considered by the rating agencies when they last reviewed our rating, and they both affirmed the existing rating on stable outlook. So the rating agencies have kind of already looked at that, and at the moment they're pretty comfortable with it.
So that doesn't quite answer my question. So are we going to get a better credit rating and reduced interest, or not?
Through you, Chair, I think we'll maintain the same credit rating, albeit will be sort of slightly higher in that AA band, but it won't have any material effect or any effect really on our cost of borrowing.
Well, Christmas hasn't come as much as I expected, but anyway.
Good question, thank you, Councillor Walker. Councillor Newman.
The Watercare used to have a Treasury Services function, which I understand is being consolidated. So this is is this a bit of a back to the future type moment where they used to, then it all got consolidated within house, and are they going to have it? Or is this they used to, it all got consolidated in-house, and now we're going to provide quote unquote arm's length Treasury Services, or are they going to have to set up their function that they used to have again? That's the first question.
Through you, Chair, no, the plan is that the Auckland Council Treasury team will, on a contract basis, provide the Treasury services to Watercare, so that will avoid the need for them to effectively replicate the staff that Auckland Council has now.
Right, so can you just explain how that arrangement does comply with that legislative prohibition?
Through you, Chair, it looks no different from Watercare contracting out any other service they may wish to. They could contract out Treasury services to a third party if they wanted to. They can do it with Auckland Council, again, as long as it's on an arm's length basis. So proper commercial terms and proper commercial arrangements.
So they're going to pay, they're going to reimburse, they're going to pay for your consultancy, are they?
Through Chair, effectively, yes, they will pay a charge to reflect the cost of the services which we are providing them.
And if I might, there's a carve out in the legislation specifically to allow Watercare to continue in the shared services space. And it goes to what Councillor Walker said, because the whole nature of a consolidated Treasury facility was for Watercare in the future to receive cheaper capital than what they could otherwise raise if they had to go on their own. So you're saying that the cost of capital for us won't go down. I assume
the cost of capital for water care won't go up?
Through you, Chair, the cost of capital long-term to water care will depend on their credit rating. So if their credit rating is lower than ours, you'd expect over time their cost of capital to be slightly higher.
I don't think water care's ever had a lower cost of capital than the council. I think it's always been a bit high, or certainly the previous reform to this was to ensure that they were a little bit higher, but they would be lower because they're being consolidated. So can we just sort of land this? I mean, I would assume that we've got the bigger balance sheet than them, or is it basically going to be about the same moving forward?
I'll answer this. So, water care, I think the model was, the reason for the model is to separate the balance sheet so water care can borrow what it needs to fund its operations. It probably would be cheaper to just keep borrowing on the council's balance sheet. The problem we had with that is it constrained how much they could borrow. So the change is about letting them borrow in their own name, and that will depend on their credit rating. As a separate, smaller, non-local government entity, it's probably going to be a little bit more expensive, but if they can borrow what's needed to invest in Auckland's infrastructure while keeping a reasonable price path. So it's about the separation. It's not about how do we get the cheapest cost of funds.
And my final question, I suppose, in relation to the debt to revenue covenants that apply. So in order to achieve the most conservative credit rating that they can achieve, really, the key leverage for them, unfortunately, is still going to be their price path, isn't it? That's really the big risk moving forward. Understanding that they will have to manage their costs in part through their asset management planning, but still the risk for water care will then ultimately be to ensure compliance with those covenants relates to their price path that Aucklanders ultimately have to pay.
So through your Chair, I think what you're asking is what impacts their credit rating. Obviously, their price path and the regulated price path in the future will be critical to that. They'll be rated as a water utility, so they won't have the same, for example, debt to revenue considerations that we have. They'll be more focused on things like interest coverage ratios, things like that, which are more typical of how rating agencies would look at water entities and things like that. So they'll be rated on a different basis to us.
Councillor Turner, please.
Thank you. Councillor Walker and Councillor Newman kind of covered my questions, although I didn't hear exactly what Councillor Walker asked. I was too busy writing. But just for my clarification, so I understand this right, Watercare will owe $4.3 billion to us on the 1st of July next year, and then they will pay it off over 5 years in a manner that suits them. And at the end of that, it's a net zero sum, right? In other words, because they're part of the group, that won't improve our borrowing ability or anything like that. Is that right?
Through you, Chair. So the first part of your question, yes, they'll repay approximately, I think it'll be about $4.2 billion over that 5-year period. How the rating agencies are looking at just council now, and that's council without Watercare, is they're looking through that debt which Watercare owes us, which will be repaid in that 5 years. So compared to what we previously had, our ratios like debt to revenue are improved because we've removed that Watercare component.
So okay. And then the other thing was just with groups shared services and remembering that clause that Councillor Newman mentioned about that they can't pay us a dividend, there is a matrix, is there, of how we work out what a reasonable charge is for the services we're going to be charging, they're going to be paying us for.
Through you, Chair, that's correct. We'll come to a commercial arrangement where they pay a fair and reasonable charge for the services which they receive.
There's some members of the public that would consider that some of our regulatory services charges are not fair and reasonable. How do we know? Where's the mediator? Is it part of that regulator that's involved, the price regulator? Who says that that's the right price?
Through you, Chair, that's the commercial negotiation between council and Watercare. What we're currently proposing is that the cost of the overall Treasury service will be effectively the staff costs involved. And what we'll probably do is look at, water care's debt relative to council's debt and allocate it in that way. So, for example, if they've got 4 billion of debt, we've got 8 billion of debt, they would pay 1/3 and we would pay 2/3. It'll be some reasonably sensible, simple arrangement like that.
Okay, sounds good. Thank you.
Sounds it's frighteningly rational, actually. Councillor Hills, please.
Thanks, Chair. And it does sort of feel like we're a little bit debating the decision we've already made. We're not debating the move, that's already done. Can I just check, because I'm pretty sure, but I feel like I want to make sure, this was never about reducing the cost of capital for Watercare and won't necessarily change their credit rating, but what it has done is meant that they can debt fund capital at a faster rate, as opposed to what we were forcing them into, which was cash funding capital, which is not a good way of spending building 80-year-old pipes.
Through you, Chair, that's exactly correct. Yeah.
Okay. And it also may or may not, because of the revenue coming in, have a benefit on our debt to revenue, but doesn't necessarily, it's not the game changer that the Watercare being able to borrow is.
Through you, Chair, that's probably a good way of summing it up, yes. Yeah.
Thank you.
Councillor Leone, please.
Mine's very brief. It was just really that explanation probably to our water ratepayers and the difference for them with obviously them paying lower rates as an outcome of this. Could you just give that clarification as to how that has happened?
Through you, Chair. So by allowing Watercare to fund now more of their CapEx program through long-term debt rather than through revenue, it means that the revenue or the price increases which were proposed, which were I think something like 20-odd%, they're going to come now down to something like 7%. And the future price path will be dictated by the regulation which we put in place.
Thank you. That's a huge difference. That is good to clarify for our ratepayers.
Thank you for that. Right. You three can retire. And if there's any debate about this, I'll take points. I do have some. I think I had Councillor Newman and Councillor Walker so far.
Your Worship, I support the arrangement, but frankly, I think it's reasonable if I feel it's reasonable if I want to ask them an inquiry in relation to the Treasury services that are being contracted and the nature of how that arrangement works. It is bespoke. The matter was covered off in the report. I appreciate that some people might interpret me as relitigating the matter. I'm not. I'm perfectly entitled to ask that question. That's what I did. I think that the arrangement that is being put in place is unusual. It is permitted under the Act, which is fine. But I want to thank the officers for giving me the courtesy of at least replying to those inquiries, because the report is a little bit complex in relation to how that arrangement works, but noting that the legislation provides that carve out for group shared services. So thank you to the Chief Executive for clarifying that matter.
That's fair enough. No, we wanted a full open debate and there's no problem with you asking those questions. It is a bit unusual, but it's not nearly as unusual as what those other councils around the country are facing who don't have a water care settlement like we've got. Councillor Walker, please.
Really just a quick point, just to forecast a concern. So what we're going to have is a circumstance where Watercare's debt is separated, and that debt will no doubt go up considerably. The other development, which I would term a hazard from my perspective, is that Auckland Council's debt also goes up because our debt to revenue ratio will have changed, and our capacity to raise additional debt will be enhanced. I would hope that that doesn't happen, and that we look to reducing our debt where we can over time.
Okay, any further contributions to this? in which case I'll put the motion. All those in favour, please say aye. To the contrary? Carried. Thank you very much. We'll move